All right. Hello, everyone. Welcome to our Thriving Thursday First Home Alliance. And so we're live. And so I want you to go ahead and post and share out there if you're on Facebook. Of course, this is our audience that we like to come out and just share some good contact. And we have a very special live show for you this evening. So, we have our crew. I have a few of our volunteers, and of course, we're going to talk about volunteers, our interns, our board members. Appreciate all the support that they're having out there. But my right hand is Charlene, and so we're going to go ahead and bring Charlene in. And then Charlene, I want you to go ahead and welcome everyone here. And this evening, not only we have Facebook, we have YouTube. So we're YouTube live. Charlene, go ahead and tell everyone hello.
Hello, we're fancy now. We're on YouTube and Facebook. Next, we're going to be on Instagram. All right, good evening, everyone. Thank you so much for joining us for our Thriving Thursday, a good conversation about finances. For those of you who are new to First Home Alliance, I'd like to introduce you to us. We are a HUD-approved housing counseling agency established by our president and founder, Mr. Larry J. Laws. Inception came, mom purchased her home at the age of 65 after serving the United States. He decided to serve his community, and that is how the inception of First Home Alliance came about in 2002. Now, what are our services? Our services are pre-purchase counseling, education, along with loss mitigation, rental counseling, as well as emergency preparedness. We have our classes, our first-time home buyer classes, which are held usually once a month in the Northern Virginia area, as well as our Thriving Thursdays. That's considered our education as well. Where are these services offered? We are in Virginia, Maryland, as well as the south side of Chicago, but again, means nothing to us. Wherever you're located, if what we just discussed in reference to those service types pique your interest, or someone that you know, by all means, you want to stick around so you can get that contact information at the end of this conversation. Larry? All right. Well, just in case he can, I'm going to keep it going. So tonight, what are we talking about? We are going to be talking about improving your credit score. It's a big deal. You don't really feel like it's a big deal until you go to submit an application and get it denied. And that's when you realize, like, oops, credit is a big deal. I was talking to my boys about that. And so tonight, we're going to talk about improving it, because a lot of times we feel like, what? We're broke. We are robbing Peter to pay Paul. So Charlene, First Home Alliance, how can I improve my credit when I don't really feel like I have the disposable income to work on that? So we have an industry expert with TD Bank, just a wealth of knowledge. And I'm hoping I'm pronouncing the name correctly. Is it Mammy? Mommy. Maybe.
Yeah, so Mommy Bolton,
Mommy.
yes,
There we go. Okay.
yes. And so we're going to bring her on up on stage here. And again, this is our special guest for tonight, and she's with TD Bank. A not partner with us, been partnering with us for a number of years. And Mommy is experienced mortgage loan officer with a number of years experience in the industry, and we're delighted to have her. And she of course like to put families together in homes. She likes to put individuals in homes. She likes to see things that's successful, and she wants you to thrive in reference to your financials. And tonight, I'm gonna let her talk a little bit about some of her qualifications and things and her experience, and then we're gonna get into our topic about credit. Mommy, go ahead and talk to our audience.
Yes. Hello. So my name is Mommy Bolton. Thank you so much for having me. So I started my career as a loan officer with Bank of America, 2003. Right. I've been doing mortgages for 22 years. I was with B of A for 17 years. I was with Wells Fargo for 3 years, and I've been with TD Bank coming 3 years. So yeah, I've been doing this for a number of years. So I can say I have a pretty good idea about credit and how to. I mean, if it's not good, how to get it where you need to be. Thank you guys for having me.
All right, Mommy, we're gonna get into this credit tonight, and so many people, they talk about credit scores, and so what is a credit score? Tell our audience, what do you think a credit score? Tell them, what is a credit score?
Okay, so credit has two definitions, right? Basically,
Mhm.
credit is an agreement between you and a lender. Basically, the lender is telling you, "I'm going to lend you this money, right? We're going to have an agreement. The amount you have to pay, and normally the amount is the principal, and they add interest to it. So pretty much, you borrow the money, and you pay it according to the terms between you and the lender. Pretty much that is credit. That is how credit is established.
Yes, okay. And that's how credit established. And it's so I was speaking to those individuals that understanding that, and for whatever reason they get caught up on this number. They get caught up on where it's a 600 or 650 on this credit score. And so uh, how is that? How concerned should they be in reference to the score?
All right. So basically, every lender has a minimum credit score required. Okay. And I'm going to use TD Bank. So with TD Bank, most of our loan programs, our minimum credit score required is 620, right?
Hmm.
Unless you're doing VA, then there is no minimum credit score required. If you're doing USDA, there is no minimum credit scores required. But for most of our products, it's 620 minimum credit score.
Yeah. Okay. That sounds good. And so on that, can you break down, what's involved in reference to the credit score and how is it, how
How
do they,
is derived?
yes, how's it
Okay.
derived?
So basically, how your credit score is calculated, right? I would say, and I'm going to talk from memory. I was trying to pull myself, but I'm going to try and do this from memory. So 35% of your credit score is payment on time. Okay, 35% payment on time. You
Hmm.
say, the money that you borrow, you pay it on time. That is 35%. And then 30%, I believe, is the credit utilization. So let's say you have a credit limit of 10,000, and I'm just throwing numbers out there, right?
Right.
So normally, if you want to build your credit, and you want to be at 30% or less. Okay. And I believe, so I have 35, I have 30, and I believe 15% is like a mixture, what you have, be it revolving credit. And when we say revolving credit, we mean credit cards, right?
Hmm.
The normal credit cards. And then we have installment loans. And so installment loans are open-ended credit. And basically that will be your car payment. Let's say, installment loan from a bank, you get 8,000, you have fixed payment until the end of the term, like 5 years. That is installment loan, right? So, what is the mixture between revolving credit and installment loans, right? And then there's 5% or 10% of how long your credit has been established. All right, that is why we always say you never want to close your old accounts, because the
Right.
older the credit, the better your credit score, right?
Yes.
So I think basically, so we have the payment,
Yes.
yeah,
Hmm.
credit utilization mixture, and yeah.
Right. Yes. And so matter of fact, I pulled mine a week early,
Mm,
so I say a week early. I was supposed to wait until August. And
right.
so I have mine every 4 months. And so I think whichever one, it was either actual facts or Experian. But I
Hmm.
had a question about something. And so
Hmm.
since it was so close to the eighth month, I went ahead and pulled it. But how important it is for us to take a look at that periodically.
You definitely want to look at it, and you can, okay, so let me go back. So you don't want to have lenders pulling your credit back and forth, because it
Why I
affects
can't
your
have a
score.
lender to pull my credit? Don't I? I mean, why
But
not
no,
just go out there
back
and
and forth, just no, you cannot do that, because it lowers your credit score. But you can check your free credit score from,
Mhm.
the annual credit score
Right.
or
So
Credit
that
Karma. You
right.
definitely want to check it. Like I check mine every month, and that will not affect you, because
Yeah.
anything can happen. And I will give you an example. See, I had a collection put on my credit report. I don't
Hmm.
even know, from some company, health company in in Pennsylvania. I
Yeah.
think someone had taken um gosh, I can't think. An ambulance, right? Ambulance,
Uh-huh.
and the name was Bolton. So the person
Right.
was in Pennsylvania, and they put a collection of $225 on my credit. Let me tell you, my credit dropped like 80 points, and basically, and this happened within a period of 2 weeks because I check mine every month.
Yes.
Okay, so it's so important to check your credit every month. With Credit Karma, it's free. It doesn't affect you because
Yes.
anything can happen. And especially if you have the same name, like family. Sometimes we have the
Yes.
same names. Um, Anything can happen. Student loans, your sibling might have a student loan because you guys have a similar name. It can come on your credit. So it's so important, so crucial to check your credit score every month. The free Credit Karma, the free creditreport.com, it will not affect you because anything can happen, and this happens so instantly. So you definitely want to be aware of what is happening on your credit.
Yes, yes. And mind you, I have the Credit Karma, and that thing flashes up and give me so many warnings. It's about as bad as all the text messages I get. I stopped paying attention to it until I seen
Right.
something that was different. And just 2 days ago, I got something that said current, Current. And I was like, current, what is that? Am I current on my payment? It says no, that you had something like a $14 charge on current. And I've never heard of an account named Current. And so rather than trust in what I saw on credit, I went to the annual credit, and for sure there's an account, but it's not mine. So I immediately
Right.
dispute. Yes,
Right.
yes, yes. There's
And
an
and the minute you dispute it, they will work on it 24, 48
Mhm.
hours. They will fix it, and your credit will come back to wherever it is. So definitely you want to, keep track of your credit score. Very
Yeah.
crucial.
And so you was talking about those percentages, and one of those percentages is in reference to opening up new credit. And so, should we just open up new credit? I mean, throughout the year?
Absolutely not. Opening new credit, what does that tell us? It tells us you are desperate. And what lenders we don't want to see is someone who is desperate, meaning, you are in a bind. We don't want to see that. Opening new credit accounts lowers your credit score so much, and it takes a long time. I mean, 2 3 4 5 months for your credit to come back up. It's just like, if we've all, let's say you buy a car, the
Mhm.
first month, the first 2 months, if you had 760 credit score, your credit score is 620. Okay, so basically, the point I'm trying to make is new accounts makes a huge difference on your credit. Okay, you're trying to purchase a home. One thing you don't want to do is go open a new account. What you want to do is try and maintain your old one. As I said, the older the account, the better it looks on your credit report. So let's say, and someone will be, well, but I'm almost maxed out. Okay, and let's say you don't have the ability to reduce, to bring the balance down. You can always call the bank and see if they can increase your credit limit. Okay, sometimes we can bring the limit down, but if you have a good payment history, the bank might increase your credit limit, so that keeps you at the 30% or less. But definitely you don't want to go about opening new accounts. Absolutely not. That does not look good. And it definitely lowers your credit score.
Yes, that sounds good. We had a group of young service members in a class last week, and that came up, in reference to closing some of those accounts. But even the college students, having those accounts and going back and talking to the creditor, to increase the limit sometime, it lowers your percentage, and also keep it as long as you possibly can, those lines.
Absolutely.
Yes,
Yes.
true. Yes. And so a person that maybe I'm not saying that they're getting ready to buy a house right now, but if they're buying purchasing a major purchase, how long should they just not open up new accounts when they're trying to make a major purchase?
I would say 6 months. Okay. I would say for 6 months, if you're preparing to make a major purchase, 6 months, look at your credit, maintain what you have, Lower your balances if you can. Pay on time. If any accounts on there that you need to dispute. Okay, any
Right.
collections, any take up 6 months. Especially, and depending on what we're trying to fix. So let's say if it's just your credit balance being high, that you can fix within 30 to 60 days. Okay, you can, I mean, if you have the ability. I mean, I'm doing a mortgage for a customer. It only took like three weeks. I mean, his balance, he was at 80% of his limit. He has the funds, so he just paid it to 30%. We waited 2 weeks because it was almost the end of the month. It was reported. Credit score is back up to 720. Right. So depending on what you're trying to fix, sometimes it doesn't take long. But if you have collections, if you have disputes, something that you know is going to take a while for you to go back and forth with the lender, then most definitely you want to give yourself time to fix it. And we all know, as I said, if we're keeping track of our credit, we all know what is on our credit, right? The ones that does not belong to you, if you dispute it, it gets fixed
Yeah.
within 4 weeks. So we know, but you definitely want to give yourself 6 months, maintain what you have, make sure your balances are low. Because remember, not only, I mean, yes, the credit score is important, but we also going to look at your debt to income ratio, right?
Correct.
So the lower balances you have, the more purchasing power you have. So give yourself 6 months, fix your credit, bring your everything down. That is what
Yes.
yeah.
Yes. And so there's a lot of course, there's Credit Karma. There's some other softwares and applications you use, but
Mm.
individuals out there that can help you. And so when someone pull your credit, definitely if someone else other than yourself, there's a pull. Can you talk to us the difference between the soft pull and the hard pull?
Okay, so I will tell you, for the three banks I've worked with, I've never done soft pull. We've never had it.
Mhm.
We don't have soft pull. But I will tell you the difference between you as an individual pulling your credit and me as a lender pulling your credit. Okay. So when you as an individual, the reason why sometimes, you pull your credit at Credit Karma, you pull your credit at Navy Federal, your bank, and you have 780, and you come and I pull it and you have 680. Okay. Because you as an individual, when you pull your credit, they use like maybe 20 factors to come up with a score. When a lender pulls your credit, they use up to like 100 factors to get the score. That is why it's always so different. And sometimes you might be, I mean, I'm doing a home equity line of credit that they pulled their credit from, their credit card, and it was, I believe, 860, and I pulled it and it was still 860. So sometimes it's the same, depending if your credit, everything is as it's supposed to be. And you know what I mean? We all know. But yeah, so I've never dealt with soft pull, so that I can answer to. But basically, when I pull your credit, it's a hard pull.
Yes, 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 yes.
Yeah,
Because you can extend a line to them as well.
exactly.
Such
Yes,
as like for us, we do counseling and education, so we
right,
can extend a line of credit to them. So it's a soft for us.
right.
Yes, yes, yes. And so we of course we're talking about the new first time home buyers, people that's moving into the market, but we also have a different crowd. I'm gonna call it a mature crowd. It's
Right.
in that mature crowd, some of them have had setbacks. They've had damages and things like that to their credit, and they're trying to rebuild or restore.
Hmm.
Can you just touch on rebuilding and restoring maybe some good tips for someone to restoring their credit after maybe a foreclosure or bankruptcy?
Okay, so one thing we as lenders we look at for, I mean, things happen, it's life, right?
Right.
But what lenders want to know is you learned from what happened. So let's say you've had foreclosure, bankruptcy, right? And then we keep that you are still being delinquent after the fact. That is a problem. I always say payment on time. Life happens, but then
Mhm.
after that, and everything is fixed, we always want to make sure we are making our payments on time. We always want to make sure we are not overextending ourselves, right? One thing I would say, I just had a file. So this customer, she's never been late on her mortgage, but she went and did my brain just went blank, where they add more years to your mortgage.
Yes, got a modification or
That's the word. She
those
had a
things.
modification. She's
Yes,
never been late, right? But and she has a lot of equity. She wanted a
yes.
home equity line of credit, and this was an argument between me and the underwriter. But I can understand where the underwriter is coming from. So she's never been late. She has a lot of equity. She has a great job. See, and I'm using this as an example because sometimes we as borrowers, we don't know, right? You call your bank, you tell them you cannot, you are maybe having difficulty this month, and they tell you, oh, you know what, we can modify your loan. We need to understand the implications of that, right? Yes,
Mhm.
they can modify your loan, they will reduce your payment, but they put that on your credit report. So even though you have never been late, because if it wasn't a bad thing, they will not put that on your credit report as loan modification. So the underwriter was like, why? Okay, this borrower called her bank and told them she is having difficulties making her payment. They modified her payment. Now her payment is lower. Why would we want to give her a home equity line of credit? Because then we're putting her back in the same situation she claims she can't handle. I'm saying this just to say this. Sometimes when we call our banks and they offer stuff, you want to have the conversation. You need to ask, what are the implications? For me in future, my borrowing, power, what does it do? We always want to make the questions. But again, if life happens and you can afford it, you can afford it. But we want to see that after the fact, right? After you do your modification, you do your bankruptcy, you want to make sure you are not overextending yourself and payments are made on time. Larry, I can't hear you.
Yes, yes, and so yes, I was listening to you there. You're talking about a relationship. That's what I was trying to get to. Coming in and talking to your banker, your loan officer, and that there are some industry professionals out there that are looking for just the transaction. But then
Right.
there's also industry professionals that are looking for the long-term relationship because
Yeah.
so talk to us about how important it is to have a relationship with a lender.
Yeah,
Someone in
I mean, it's so crucial. See, let me tell you, I have old customers, from Bank of America, Wells Fargo, calling me, and I'm always upfront, right? Again, a lot. We are all commissioned. We all have families to feed, but again, I try to do right by all, with all my borrowers. And you want a good relationship. You want a lender that you can call anytime, and the person is going to be available to answer your questions. Right, being where to send your payment if you're having difficulties, you have questions on your escrow. You definitely want a good relationship with a lender, and you want someone that is going to be in here for for a long time.
Yes, yes. Because speaking of we, of course we have a relationship with a lot of different financial institutions, but speaking of TD, it's not like we just found out about TD, and so it's not only the organization, but also there's individuals as well,
Yes,
because sometimes
yes.
individuals do change different.
They change.
Yes,
Absolutely. They
yes,
change. So you want, like, that's why normally I won't talk about the institution. Yes, TD. But again, you want the individual, someone that, even if they're moving from this place, they are still in the business, they still have the knowledge, and they're available to you, regardless of wherever they are at.
yes, and I highly recommend when they hear something new, whether it's a new company or whatever, a new product,
Right.
then go to the person that you have the relationship and get some advice from, a
That is
suggestion from
correct.
them, and rather go into something, the new thing, the new shiny object that you're running after,
That's correct.
because you can definitely be educated on that. And so, how can some of our mature crowd, what age should we start talking to our kids about credit? Is there an
Um,
age?
Let me tell you. See, I have, and I'll use myself an example. And I know people say my OCD, but I have a 15-year-old and a 9-year-old, and this conversation, we were just having this conversation two days ago, right? And we were talking about needs and wants, and I mean, I was so surprised because I didn't know about needs and wants till I was in college. But my little 9-year-old, they are like, I mean, they're teaching them that in school already. And she was able to tell me about needs and wants. So, I mean, there is no, I have been teaching my kids about money because I always say, you know what? Credit is so crucial. It is so crucial in this country. You might make a lot of money. And if you do not know how to pay your bills, it means nothing to anyone. Unless you have enough cash to pay for everything in cash, you need credit. Even when you're looking for a job, right? A lot of people, and not a lot, 90%, they will look at your credit when you're renting an apartment. So it doesn't matter if you're not trying to purchase. It's so crucial. So I say start talking to them now as early as possible. Put, it's a habit, right? Payment is a habit that they need to know. This is a habit you cannot break away from. So we need to be talking, about credit with our kids as early as possible.
Yes, yes, and I know we're live on different platforms. I just want to give everyone a reminder that we are live at this person time. You can actually go ahead and drop any comment. You can give us a thumbs up there on YouTube. On YouTube, you can subscribe to this channel. This is going to be weekly that we're providing you with a financial literacy education. We want to empower you with your knowledge, to ensure that you're financially fit to help you reach your financial goal. And of course, First Home Alliance, we pride ourselves in, helping individuals becoming homeowners, but also sustaining homeownership. And we have a great relationship with a number of partners. And this is one of our partners on tonight. Community Partners TD Bank. They have been in this industry and in the field with us, helping individuals become first-time home buyers, but also a plethora of products that they have and services. And they have some excellent individuals that we'll build relationships over the years that have helped so many in our community. So definitely continue to reach out and stay connected with us. And if you have a comment, go ahead and drop your comment in the block there, and I will bring that topic up with our speaker tonight. Okay, Mami, with in reference to kids, in reference to if you're trying to, I know there's a couple of some discussions that some of the parents, but we also have individuals that some are not parents, that we have uncles and aunts and things like that. Ways to get them started. Talk to us about having them as an authorized user, and then talk to us maybe some secure credit cards or something like that. So how to get them started.
Right. So
Yes.
how to get started? First off,
Yes.
if you have a bank account, my advice to you will be to go there first, right? If you don't have credit, then of course, as banks, lenders, you don't have credit, we don't know how to trust you in the beginning. So you can do they call it what is it? A secured credit, a secured credit card. So basically what that is um, they will open, you can start with like $300, $500. You will open a savings account and you put the $500 in, and then they will give you a credit line for $500. So basically you are borrowing against your own money. But the most important thing about this credit line is the payment history will be reported on your credit report. Okay, so you start with that. In 12 months, 12 months payment will be reported. After 12 months, if they see that you have the habit of paying everything on time, then you can get a regular credit card, one that is not secured. Also, if you have a relative, if someone that you trust, right? It doesn't always have to be a relative, and they have an account Again, I say trustworthy because yes, they can put you on as authorized user, but you don't want to be put on as authorized user on an account that the person is not going to pay on time, because that is why I say trustworthy, because that is going to hurt you in the long run. So you need to definitely be a bit be careful about whose account you're going to be authorized user on. So you can do the authorized user, and then you can do the secured credit. And again, let's say you have I'm trying to think. Let's say you rented an apartment, right? Normally, apartment rental payment is not reported on the credit report, but you can report it yourself. You can contact the credit bureaus, and the payment every month that you make the payment will be reported on the on your credit report as well. So that will be a credit history, right? So anything that you pay monthly, utility bills, is not reported on your credit report. But if you're trying to build credit, you can have that reported on your credit report, so you have the history. But again, if you're going to try if they are reporting it, you want to make sure you are paying on time every month. That is the key.
Yes, yes, and monitor, if we want to call it monitoring, just keeping up. And I know we mentioned a couple of the applications. Do you have and some other applications that maybe you haven't mentioned that maybe individuals can use to help keep track of their credit?
I mean, we have the Credit Karma, right? We have the Experian, all the the TransUnion, the Equifax, right? All these three, you can actually go and subscribe, and if you look at your credit, it doesn't affect you, and it tells you right there. Okay, you're not trying to pull, they will say, do you want the option where you pay to get like a detail? You do not want that. You just want the one that is like you keeping track of your credit. All of those are free. Okay, Equifax, TransUnion, Experian, Credit Karma. You can do that with your bank as well. Now, luckily, all the banks, they give you a credit score. I know the banks, they will not give you details, but they will give you a credit score. So if they gave you a credit score of 720, and you go next week and it's 620, something ain't right. You need to follow up and figure it out. Yes.
Okay, super. Yeah, and and I know we again we talk about these homeowners, and I know for cars it makes a difference. But how important the difference in that credit score of a 620 and a 680 when you're talking about purchasing a home?
Okay, so it makes a huge difference. The reason being, the higher your credit score, the better, first off, interest rate is better, right? Your the terms of the loan is better. Okay, your debt to income ratio, the loan to value is all better if your credit score is higher, right? So we say yes, minimum credit score required is 620. That is what is required, but the higher the credit score, the better. Our example, we have a program, we call it the TD Home Access. Okay, so TD Home Access is a portfolio loan. Everything is manually underwritten, and we say if you have 620 credit score, that is the minimum credit score required. So 620 credit score, your debt to income ratio is 45%. Okay, but let's say you have 660 credit score, your debt to income ratio is 50%. Okay, and that can make a huge difference on the house that you're trying to get. So I would say try, yes, 620 is the minimum required, but please try and get it as high as possible. And I'm telling you, if you're making your payments on time, you're keeping your credit utilization 30% or lower, it is not, I mean, your credit will go high so fast. Like, it's not hard to get there. So try and keep it as high as possible.
Yes. Okay. And looking at if a person had a target, say, I want to hit a 720. I mean, how much more options do I have at 720 versus 620?
So how, oh, a lot of options, a lot of options. I mean, you could do a regular, conventional loan, 3% down, right? Your interest rate, instead of interest rate being 7%, you're probably going to be 6.5, which makes a huge difference. Your mortgage insurance companies, they look at your credit score. The higher your credit score, the lower the mortgage insurance is if you're doing conventional. So it's huge, huge. Even if you're trying, I would say our matured borrowers, you're trying to do a home equity line of credit, we say
Mhm.
660 is required. If your credit is 740 or higher, you can go up to 90% loan to value of your property as opposed to the 75%. So having a higher credit score makes a huge difference
Okay.
in your purchasing power.
All right, super. Now, there are some debt out there that some of our younger individuals just getting into the, just maybe starting a new job, but actually had a long stint in college. And so they have, the college debt. And so how is that calculated or worked in if you wanted to purchase and you have college debt?
Okay. So if I always advise my clients, you want to call your student loan, whoever holds the account, and get income based payment. Okay, if you have the income based payment, that is what we have to use. Even if they put $0 on there, we have to use $0. You want to negotiate with them, because if you do not, we have to use, if we do an FHA, we use 1% of the balance. If it's conventional, it's half a 0.5%. And that will make a huge difference in your debt to income ratio. So I always, and actually, I had a text whilst I was on this call. It was the lady asking me, you definitely want to call your student loan. Yeah, because if it's in deferment, there's not going to be any payment. But you want to call them and ask them, when it comes out of deferment, what is going to be my payment based on my income? And they will give you a payment, income based payment, which is going to be way lower than what we will use.
Yes. Yeah.
Calculation.
Yes, and we do have a comment here online, and we're talking about the impact of those life things that happen. And we have an example, and it's just more of a comment. A person that had well over 775 score,
Mhm.
but experienced a bankruptcy. And we understand that bankruptcy just don't happen overnight. A lot of
That's
times, there's
correct.
other things that leads up to that.
Yeah.
But he said it was a significant drop. Have you have paid attention to maybe someone that had a high score and how dramatic the drop was, but going through that process?
Is going to be is going to the when the bankruptcy is finalized, the drop is going to be huge. If you have 760, I won't be surprised seeing your score in the 560s, because bankruptcy in those are some of the major events, right? But after it's finalized and you start making, that's why I always tell my customers, give yourself 6 to 12 months. You start making the payments on time, it will come back up. And remember, depending on the type of bankruptcy, you won't be able to do a loan anyway for 2 or 5 years, right? Be it chapter 7, chapter 13, whatever what it is. So you have time to build it back up. But definitely after bankruptcy is going to be a huge drop, no questions about that.
Yeah. And what would be a reasonable amount of time to rebuild following a bankruptcy?
Give yourself 6 months to a year.
Yes.
Give yourself. And one thing I will bring up is, so when people go through bankruptcy, right, and they owned a house, and this I'm about for our matured borrowers, right? What we have to remember, and a lot of customers don't know this, because when you do the bankruptcy, they roll in all your debt in there,
Correct.
including your home, right? After the bankruptcy, if you do not call them to reestablish your mortgage back on your credit report, that means yes, you're going to keep making payment on the house, you live in the house, but you don't own the house because it won't be on your credit report. So after bankrupt, and a lot of people don't know they have to do this, you need to call them and have them reestablish that mortgage back on your credit report for the payment to reflect. It's so important.
Yes. Yes, because it's one of the largest debts that you have, and it's multiple types of loan products that actually and strengthen your score. Yes, and I know some think that it's the end of the world, but I've actually known individuals that have went through bankruptcy and have rebounded and still later was able to purchase property again.
Absolutely. We do it all the time. All the time.
Yeah.
All the time. It's not 2 years. As I said, depending on the time, the type of bankruptcy, 2 years, as long as after the fact everything is done in order, you can purchase, you can refinance, you can get a home equity line of credit easily.
Yes, and and it's the same as starting if you want to say starting over again. And
Yes.
I would not say it's like a clean slate because what it is that the language, if you want to say the language stays on there and could stay on there up to 10 years. So the language
Yeah.
may be there, but you don't have to wait 10 years before you rebuild. And
No.
so the
Nope.
language is there, but in reference to reestablishing your credibility, reestablishing your score, reestablishing your history, you immediately start right away. And
Yes. Yes.
yes, its damage is crashed, but you immediately start seeing improvements if
Yeah.
you do the same things that you did when you originally started. Um,
Yes.
Yes, and so the comment is here. It was saying that they were able to rebuild, and they said that the chapter 13 was finalized in March, and so with that, they have already elapsed a few months already. It's already been March was the third month, and now we're in the seventh month.
Yes.
That's 4 months, and so yeah, you would think that they could definitely rebound and begin moving forward.
Absolutely.
Yeah,
Absolutely.
yes, and so with that, that's what a bankruptcy. What about foreclosure? Those that facing a foreclosure or have foreclosed. What some of the steps they can do on the other side of that to move back towards homeownership?
Okay, so the same thing. When we are underwriting files, our underwriters at TD Bank, we use common sense, right? We just don't, not all one size fits all. We want to know what happened. How did the foreclosure come about? And after the foreclosure, what step did you take to put yourself in a situation that this will not happen again? Right? So we say after foreclosure, I have to look at my guideline. I know after foreclosure is like 3 years. You can purchase, but even even if let's say you have the 2 3 years after the fact, we still want to make sure that you've learned and that this money that we're going to lend you, we're going to get it back with the returns, right? So foreclosure is not the end. The same thing. After the fact, you start right back, make sure everything else is paid on time, you don't overextend yourself, and we will get you back and you'll be able to purchase within no time at all. I think Larry's stuck.
Yes, completely off.
Yes, there we go. You're back.
Yes, yes. And how important it is, on your credit report after almost any incident or inquiry, there's a little note section. You can actually put a comment or something. How important it is to, put your explanation there.
Like the inquiry.
Yes.
Yeah, it's very very important, right? It's very important because when we pull your credit, we actually, the credit is like a lot of pages. We actually read through it all, and the explanations as well. So it's very very crucial, and the explanations, I mean, it doesn't, it's not a lot, but at least 5% of your credit will be, the explanations, the disputes, and all that goes towards your credit score as well.
All right, super. Yes. Well, mommy, I want you to let us know what do you see on the horizon, and maybe in reference to what's going on with maybe it credits, the interest rate, and also what do you see that maybe some if you have something new that's products that maybe are coming that are hitting the market.
Well, what do I see? I mean, we are all hoping, right? Interest rates will come down, right? And we are all hoping. I mean, I don't know if value home prices are going to come down, but something has to give for people to be able to afford to purchase, right? That's what we all hoping for. As for products, we have a lot of affordable products. We have our conventional loans 3% down, lender paid mortgage insurance, which what does that mean to the buyer? It means you have more purchasing power because you are not paying the mortgage insurance, right? We have one product that dependent and is property specific, depending on where the property is. If it's in a one of our our MSAs, we give you 10,000, which can be used towards down payment and closing costs, right? We have our VAs, we have our USDAs, we have our FHAs. I mean, we do it all. We have our construction. If you're looking at we have all the traditional loans, the construction loans, the doctor loans, all of that. But for affordability, I mean, we, as I said, we have one of the best products at TD Home Access. You cannot beat it. And the fact that it's lender paid MI, it's conventional loan, it's portfolio. What does that mean? Because remember, when we're doing a loan, normally we will run you through an engine. We call it DU, right? And it's a Fannie Mae platform where DU will come back and be like, oh, okay, yeah, you have a credit score of 660, but there's something on the credit score that we don't like, so we're not going to do the loan. But our TD Home Access is actually manual underwritten, so we don't run it through DU. It's a box. It's either you fit in or you don't. So if you have the minimum required credit score, which is 620, that is it. We're not going to look in there and be like, why is it 620? Something is there that we don't like. And then again, we give you the 10,000. And if you have 660 credit score, you can go up to a debt to income ratio of 50%.
Yes. Okay. All right. Okay. And so we're going to close this up here. I really appreciate you coming on and talking this evening on credit. And we definitely want to look forward to having you back.
Absolutely.
Live. Yes. And of course, we're going to get you in person too, coming soon. Yes. And so if any individuals wanted to get more information or follow up or contact you, can you share some contact information on you?
Yes. So my phone number, we ready? Is 301 273 5399. That phone number never changes. It's been the same number since Bank of America. Is the same. 301 273 5399. And my email here at TD is mommy, my first name, dot my last name, mommy.bolton@td.com.
Okay. All right. Sounds good. Yeah. Again, we want to say thank you for coming on, and we're looking forward to having you back again. And we are going to go ahead and make our announcements and for our audience. And so our audience, we want to thank you for joining us today on basically Facebook and also YouTube. We want to say thank you, Mama, for coming in.
Thank you for having me.
Okay. All right. And we'll see you next time.
See ya. Have a good evening.
You too. Thank you. All right. Okay. And so for our announcements, we want to make sure that you're going to follow us on Facebook. And that is at First Home Alliance on Facebook. Also, we have YouTube on YouTube. Of course, I was flipping on and off and in and out on the YouTube there. You want to go ahead and hit subscribe and like, and you'll be able to see us come live. And so the next time we go live, you'll be able to see us there. And of course, every Thursday, but we periodically when we're on our events out there, we're going to pop in live. And so you'll be able to get a bell. The bell will ring when we're live on YouTube. And so, of course, we're trying to grow our audience. And so continue to share and post our link on all the social media. On Mondays, we have our Monday, that's Yoga with Tippy. That is at 7:15. So join us live on the platforms at 7:15. We're going to try to get it on the other platforms, but of course, we have continued to do it on Facebook, but we're going to look at getting it on the other platforms come on Monday. Again, if it's not on this platform, on YouTube or one of the others, Instagram, then of course just continue to follow us on Facebook, on our Facebook page there for our live on Monday mornings at 7:15. Of course, every Thursday we're here. Check our website out. That's www.firsthomealliance.org. On our website, you'll see all the upcoming events. that we have. Of course, the first time home buyer classes that we have both online, but we also in person on a monthly basis for those workshops. And go ahead and mark your calendars for November the 8th. That is our annual gala and fundraiser. We're looking for a large event this year, and we look forward to you to join us and come out and have a good time and celebrate the accomplishments for this year. So that's November the 8th. It will be in Woodbridge, which is the Northern Virginia. It'll be held at the Hilton Garden Inn in Woodbridge. So check our website out. Go ahead. If you're interested in advertising or being a sponsor, please reach out to me directly. That's our phone number, 703-580-8838. And you're interested in sponsoring our marketing with us and highlighting there at the event, my extension is 106. And so again, thank you for joining us tonight. Thanks to my crew for putting this on, and also our guests. And we'll see you next time. You have a great day. And until then, be safe. And thank you for joining us. See you next time. Bye-bye.